At the start of the show, we talked about how airlines are going through high turbulence. Jet Airways being aggressive on cost rationalization, is looking at various methods, including salary cuts. Reports do suggest it could run out of money in 60 days. Indigo's profits have already nosedived and crash landed by 97%. You just heard the Minister of State for Aviation, Jayant Sinha, conceding that all is not well. Let's take that conversation forward with Kapil Kaul, the CEO and Director at CAPA South Asia. Good afternoon, Kapil. This is Nantara from the New Delhi studio. I know you have very firm views when it comes to the airlines, charging too little for fares. I'm not sure the consumers will agree with you, or that'll make you popular with flyers and the consumers of the airlines. Having said that, is it fair for all of these airlines to continue to blame crude prices, prices of ATF not being under GST? All of these airlines knew all of this when they entered the aviation business. It's not come as a surprise to them.
Good afternoon, Nantara. I must just clarify at the start that about the fares, India is, as I said yesterday, the lowest fare regime. It doesn't cover the cost, and that has been historically. We are the lowest. Our fare regime is very low. Passengers book last minute would find fares very, very high. That is departure. Largely, unpurchased fares are very there are cyclical traffic for very, very few periods in a year. So our fare regime is the lowest. Cost is very high. So that is a special challenge with the cost ability to ability to pass on those costs is very limited, and so the extent where it's industry. But coming with respect to the question, don't think airlines are blaming. Airlines are primarily reflecting that has resulted in the last 6 months in reflected in their results that the costs have increased, whether it is with respect to fuel or currency. And even in certain airline cases, the non-fuel costs are significantly up. May not be case in the Jet Airways case, but in the most of the other airlines, the fuel as well as non-fuel costs have gone up. So, and their ability to pass that cost to the customers is extremely limited. So that is basically the problem of the industry, that your costs continue to be high and your ability to pass on those costs to the customer is limited, almost negligible. And that's basically the story for entire domestic Indian carriers. And that has not changed, and I don't see in the near term changing given the kind of capacities that the industry is going to endure.
I just wanted to understand, specifically, about Jet Airways. When the previous results came in, that's the Q4 numbers, the auditors did mention that net worth could erode any time. But however, for companies like these, they get cash every day because of their sales. That's why it is difficult to say they can't fly below 60 days. What will be the sales in the next 60 days? How things pan out over there?
Well, first of all, with respect to Jet, Q1 results had some one-time maintenance cost, which were roughly about 253 crores. You had seen in Q4 their interest costs going up. You had seen their maintenance cost going up. You had seen their distribution cost going up. There were other costs which were relatively stable, but in Q4 particularly, the fuel costs went up, which is naturally, and that's not in their control. But if you see their aircraft maintenance costs, you see their other operating costs, you would see their interest cost, and even the sales and distribution costs have significantly gone up in Q4. And as I said to you, that even though Jet over the last 3-4 years is doing its best to increase productivity, increase their aircraft utilization, and which has seen the non-fuel CASK relatively stable. In certain cases, it has taken a dip. It's about last quarter it was about 1.1%. But the other costs, which is relatively fuel and exchange rates, their ability to pass on those costs to the customer is limited. The second point, which is specific to Jet Airways, is that the company's restructuring efforts largely have not been completely delivering the kind of results that they had, because the market conditions are also changing with respect to other cost increases. Whilst they're delivering on some restructuring, milestones, especially productivity of their assets. That has significantly gone up. They're attacking non-fuel cost, but it's not significant enough to change their bring them back to sustainable profitability. But that's a systemic issue about the industry as well. That their ability to pass on the cost is very, very rare. And as the capacity comes in, the ability will get increasingly limited. I don't see that changing in the near term. And as we say, that fuel is not in your control, exchange rates.
Kapil, as you say that the ability is quite limited to pass on, but if they continue to bleed like this or make no profit, no loss, even Indigo on an EBITDA level made a loss. EBITDA level they didn't make profit, but on an EBITDA level they did make loss. So sooner or later, if oil doesn't cool off, if dollars doesn't or rupee doesn't appreciate, they will have to pass on some price hikes.
No, so price hike inevitable, but the moment they do these price hikes, the ability that the impact on their load factors is significant. So you would see that before the advance purchase fares are so soft that these advance purchase gets almost significant traffic. But as you go closer to departure and increase fares, the ability to attract large number of people at that price point is limited. So I think going forward, I don't think there is anything immediate remedy that they can pass. There's no immediate remedy because the market for higher fares, which completely covers their cost, isn't there. So they will have to look at what is in their control, which is what possibly even Jet is doing, is cutting costs across all levels, which are non-fuel costs. Labor is one, and you saw that that's happening. There would be other measures that they need to take. But the fundamental problem for the industry remains that the cost of running an airline is not adequately compensated by fare inputs, even if you continue to restructure your costs, because the ability to pass on those costs is limited. That will continue. I don't see that changing at all.
Right, Kapil. Thanks so much for taking out time for us. Always good to get perspective from you. That was Kapil Kaul talking about the industry and how right now the passing of the yield or yield increasing is becoming extremely difficult, and that is taking a toll on some of these aviation